They just crushed earnings.
Right? And what did the stock do?
Went down.
Exactly. People are over it. They're over the AI chip trade. My concern is, does this revenue become a circular scheme? And how is it sustainable for a company like Nvidia to keep generating revenue in the tens of billions of dollars per quarter?
How long is that runway until it gets to a point where it's maybe a law of diminishing returns?
Welcome to the Wise Money Guys radio show. I'm your co-host, John Scambray, and I'm here with my partner,
Giuseppe Visconti.
And we are certified portfolio managers, which means we are investment experts that specialize in helping people who are retired or about to retire manage their money. If you like our show and have any comments, questions, or want to get together for a no-obligation consultation, give us a call at 916-967-3500. For more information, you can visit our website, wisemoneyguys.com. You can scroll down to the end of the page for disclosures. There's also great content there. In fact, somebody recently told us that they spent some time going through the resources that are available on our website, because there's different articles that we get and attach to our website. There's videos, there's
retirement
calculators, and there's a chat functionality. If you just have some basic questions before deciding to meet with us, you can click on the chat and they can answer basic questions and then to us. More importantly, we are having our first of the year, and it seems like it should already be like our second one, but it is. It's just the first one of the year.
Because time's flying.
Yeah, because it's March, but nevertheless, our first retirement dinner workshop is next week, Wednesday. I guess that would be this week. Is that this week? No,
you always do this.
Saturday's still this week, so it is. It's next week.
Yeah,
and we're starting a little bit earlier, 5:30 to 7 at Wood Creek Golf Club. Again, 5:30 to 7, and to get registered, you can do that a couple of ways. One, you of course can call and just register with Kathy by calling 916-967-3500, or at our website, again, wisemoneyguys.com. There's a tab up top that says workshops. If you just click on that tab, then you can scroll and it gives more information about what the content will be. And you can just fill out the contact there that is to RSVP, which will go to Kathy as well. And then that gets you on the list to attend. By the way, we picked out some great food, I think. So yeah. We're going to feed you. There's also going to be dessert and your typical refreshments. No alcohol, though. But if you wanted alcohol, you could buy it. But coffee, soda, water, sparkling water, and I forget the food items, but it was like chicken piccata and
it's enough food. A couple different food items, different appetizers, things like that. So
but that's not why you come. You come.
That's why I'm going.
That's why Giuseppe's going. But if you're somebody who feels like you're underrepresented, maybe you're wondering why you're not getting the results and the value out of your investment portfolio, your plan, or maybe it's just been a while since you've looked at things or heard from whoever is supposed to be taking care of you.
Maybe you got too much going on in different silos. We just met with a new prospect that's a new client now, and he gave us a file, and we had maybe like 5 different statements out there.
Oh, at
6 different accounts. And just too much to kind of track and manage. And there was just basically everything was its little own silo. So, what we're going to be doing is combining some of these accounts.
Yeah, because there was multiple IRAs at different firms, all with
multiple accounts under the name of the trust.
Yeah,
which really no reason to have, unless you want to keep them separately. But then it's just hard to track.
Yeah.
You know, what's one account doing versus the other account? Is one account and the investments in that account complementing the other investments in the other account, or are they duplicating it? Do you have too much risk in one and not enough in the other, or too much risk in both? So there's all these things, and it's basically we're helping to simplify his life in the investment world, organize, and then not only that, but some of these accounts were smaller accounts, but now they're combined together. Just
gives you more scale.
Exactly.
For diversification.
Right. And different investments.
And we spend a lot of time talking about diversification, not to get too much off on a tangent, but the reality is you're not benefiting from firm diversification. And we see that a lot where people have, again, as this new client we just got, accounts everywhere. And
Morgan Stanley, and then another account at Schwab, and another account over at Fidelity, Price,
or so on and so forth. And often what you miss out on is true diversification, because we, first of all, specialize in building custom portfolios primarily with individual stocks and bonds. Some funds, ETFs, especially for the alternative or the hedging or the private debt side. But for the most part, these stocks, that could be hundreds of dollars a share. If you've got a bunch of small accounts, you really can't have a properly diversified custom portfolio designed specifically for your plan goals if it's spread too thin.
Well, and it's just hard to track, right?
Yeah.
Especially if you're managing yourself. And then even if you're not managing yourself and you say, oh, well, no, I have an advisor at Morgan Stanley and they're managing one portfolio. I have another advisor at Fidelity and they're managing another portfolio. I have another advisor over at wherever and they're managing that portfolio. Do all those advisors managing those separate different portfolios get on the phone and talk to each other and say, hey, I'm trading this and rebalancing that way? Maybe you want to complement your portfolio to, adjust with mine. And no, they don't. So still working in silos. And you want, most importantly, like we've talked multiple times, having your assets align with your overall plan. Right? What is your timeline? What are your financial goals? What's important to you? How hard do these assets need to work for you? Whether it's for spending goals or, things in the future, near-term future that you're going to either purchase or pay off or help family out, or plan for the unexpected. And so the plan has to be the foundation. And then that basically runs and directs where the assets should be invested and how they should be invested. And then they just work synergistically. And as time goes on and your plans change or the market and economy changes, then you make the necessary adjustments.
By the way, if you're wondering why you should be listening to us, or maybe you've tuned in for the first time and never heard us on the radio or on our YouTube channel or come to a seminar, Giuseppe and I have been doing this for over 50 years combined. And, that in itself doesn't make you investment experts, but our skills that we have learned along the ways that are battle tested, I like to say, and the continued effort we put into making sure we're students of however this industry, this financial management, this financial services industry changes. We spend a lot of time, effort, and money making sure that we have skills and resources second to none.
Best tools.
Best tools. That is.
Well, we just added, this year, what we did is we're hiring, additional staff. We've implemented a couple, we're spending money and implementing a couple new software and technology tools on top of it. And so we're just continuing to try to build. One, we want to have the most tools available for our clients, and then for ourselves on the business side, just to run efficiently, just to provide the best experience that we can for the clients. And the best part of it is that we're our own business. We don't custody the funds ourselves. We use the large asset managers out there and custodians. Schwab is the main one that we use, but with that, we get to use Schwab's tools, and then anything that we feel that's lacking, then we add on top of that. And what we really provide for our customers is an unbiased, truly, business environment that's going to be going towards our goal. So if we see that, hey, this is what is needed for clients while we're meeting with them and their needs and their plans and so on and so forth, we can go out and get it. We're not restricted.
Yeah. There's so much fear, I guess, recently over this whole AI trade, AI technology, what we often refer to as the fourth industrial revolution. But the reality is that we're years, if not decades, away from where humanity is just replaced. Do I think that humanity can be replaced in a lot of aspects for, certain skills? Yeah. But at the same time, the robotic, the artificial intelligence, the machine learning, all the things that are tied to AI, it will never be able to replace empathy and caring and understanding and just being able to meet with a warm body. So I think, the scare that, oh, geez, every job is going to be replaced. I don't think so. Maybe, like I said, every decades from now. But at the end of the day,
there are some that are impacted already, though.
No machine will ever care about, your results, your experiences, your needs. And as Giuseppe said, the tools that we're employing and investing in to make sure, our service has everything that, whether you're managing hundreds of millions like us or billions, you're not going to find yourself lacking for the resources that we have because we manage hundreds of millions versus billions. So anyway, we need to go to a break. When we come back, we're going to talk about some things, some current events happening, give you some ideas on strategy and things that we're doing right now. And again, keep inviting you to the seminar, the dinner seminar for retirees on the 4th. Stay tuned. The Wise Money Guys will be right back. Hello and welcome back to the Wise Money Guys radio show. I'm your co-host, John Scambria, and I'm here with my partner, Giuseppe Viscani. And we're going to talk a little bit about the things that are going on. And one of the biggest that, geez, it just is crazy every quarter. I was mentioning AI and machine learning and artificial intelligence and all those things that are making the fourth industrial revolution become a reality, and none bigger than Nvidia.
Yep.
And I think Nvidia has gotten
Big Daddy
stale, quite frankly, because
what stale? Why?
What? Well,
they just crushed earnings,
right? And what did the stock do?
Went down.
Exactly, because people are over it. They're over the AI chip trade. They're definitely over the software.
Well, it could be just
trade.
It could be just chasing because there's just been a rotation out of some of those tech stocks and going into other sectors, and maybe they're continuing and there's some profit taking, but we'll probably see it dip down and then come back up. I mean, if anybody's a leader, they're it. And as long as they continue to produce earnings, it's continue to provide a runway for them to stay at elevated levels.
My concern is does this revenue become a circular scheme? And
you mean the investment part of it?
Yeah, the investment part of it, because how many companies are out there that can keep just going, oh, we're investing in AI infrastructure and we need billions of dollars worth of, AI chips. And how is it sustainable, for a company like Nvidia to keep generating revenue, in the tens of billions of dollars per quarter? Well, there's only a finite number of companies that have scale to buy, Nvidia chips for, various applications, whether it's data storage or some other sort of need.
Well, I think a couple things would be, what the capability of the chip is, and then how long its lifespan is before the new chip that is greater and faster and better, that then those companies within the industry now need to upgrade, right? And I think right now it's just a big boom because everybody's just trying to get established with this whole AI thing. And they're trying to play either catch up or lead the game. Right. And it's countries. It's not just businesses in the US, but it's countries around the world trying to go after this AI race. It was kind of like the space race is kind of how I feel it is.
And that's what I think slows down.
At some point, you know, and at the other thing is
hit peak.
Well, and at the other point, what is the peak? Is I guess that's the question. And I'm not an engineer, but if you look at the trajectory of AI and its exponential growth of capabilities, I mean, that thing just continues to go up like a rocket ship, right? It's not this slow, slightly upward curve,
a high single digit or a low double digit growth trajectory.
It's exponential. It's what
ridiculous.
What AI and LLM, machines and machine learning was able to do 6 months ago, a year ago, is obsolete in comparison to what it can do right now, right? And so how long is that runway? Yeah. How long is that runway until it gets to a point where it's maybe a law of diminishing returns? And then at that point, it's like, okay, well, then we've upgraded our chips to a certain point.
Yep.
It's kind of like our laptops, right? We get computers.
Oh, yeah.
And then how long? I mean,
dated. That was the Murphy's Law or something of that nature. Remember that It was the rate of transactions, or no. It was how many transistors could fit on a silicon wafer. And that was like doubling and tripling like every month or every quarter of every year.
Right.
And now they've gone to, how many instructions per second basically can an AI chip do, which is in the, billions actually, which is just hard to fathom. But here's my 2 cents. And it kind of goes to just an overall theme.
Might need to say nickel now because penny they don't make pennies anymore.
Yeah, pennies cost a nickel to make.
Here's my 5 cents.
Here's my 5 cents, which costs 7 cents to make. The reality is that our philosophy and our management style for our clients, especially our retired clients, is to take some profit off the table, right? And I think that's what's your point. Right. That's what's happening. I mean, does Nvidia go to $250 like several analysts that we were reading this morning have increased their price target to? Maybe, but if you've already made double digit or even triple digit returns on the Nvidia trade in your portfolio, I'm not saying get out of it 100%, but my 5 cents would be to trim the position. And we have done that. Yes, I'm going to stick to the 5 cents because you're right. Inflation, you can't do 2 cents anymore. It's 5 cents. So, but that's where we're at, right? I mean, there's other investments, other things that haven't run that could potentially have more upside than Nvidia.
Well, we've been seeing that for the past few months, right? And that's what that rotation has been, is stocks of other sectors, right? Not these big Mag 7 names. They haven't been the shining star. It's the rest of the 493 stocks within the S&P 500, right? Not the Magnificent Seven. And I think that's where you're seeing maybe some of this sell-off and some profit taking and then spreading it out into other sectors of the market as well as some other areas of the globe. Because they've had a good run up as well, and they've continued to run up. So
which stock I think is still an interesting story as far as the fourth kind.
That's a scary movie.
That's a scary movie about aliens
and abductions.
Yeah, abductions by aliens,
which Trump was supposed to release.
Yeah, he's going to. He said he's going to
release.
He's going to release more info
on UFO and UAPs and all that stuff.
Exactly.
Yeah,
but I think the one that has still out of the Mag 7, by the way.
Oh, I thought you were going to go to your sponsored company.
Frontline. I'm not going to. I do love energy, and I won't lie. I think the energy sector is, everything begins and ends with energy. Always has, at least for the foreseeable future. It will. Maybe it won't always be oil or coal or nuclear.
That'll be AI.
But eventually, right? That's where it is right now for at least the next decade, or until some sort of breakthroughs in battery storage, solar, renewable, other than nuclear. Maybe it's the cold fission or the hydrogen play is actually, a lot of what futurists think is the future of energy because it's reoccurring, it's abundant, it's affordable, and they're becoming a lot more efficient at turning hydrogen into electricity with a byproduct of water. I mean, think of that, right?
Yeah.
So that's neither here nor there. But where I was going is, I think the Tesla story is still interesting, not because of electric vehicles, but because of SpaceX.
Yeah.
And I think if SpaceX, there's been a lot of information out there, a lot of conversations, a lot of talk from Elon Musk that he's considering either making SpaceX part of Tesla or SpaceX going public on its own, so on and so forth. But I think there's a lot of potential there.
And not only that, but he's got SpaceX, he's got Starlink, he's got Neuralink, he's got now robotics.
Yep.
Right.
His course is still X and so on and so forth. But by the way, we can get clients who are interested. Now that's a very speculative, aggressive, investment, and aggressive, in case you haven't heard or figured this out. From when your advisor says aggressive, it means that on the risk return scale, it's a higher risk for a potential return. And that ratio is how we nicely call it, either aggressive or moderate or conservative.
And typically you're more concentrated in stocks. Not the other asset classes.
So by the way, we have and can get for our clients minimum $25,000 investment into your portfolio that will be tied and have some exposure to SpaceX plus Anthropic plus some other biggies,
because those are all private equity.
Private. And so if you're interested in SpaceX and getting that into your portfolio, again, that wouldn't be the only reason why you would give us a call, but it's certainly one to potentially discuss your overall makeup of your portfolio and how it's allocated, and get a free review and consultation out of us and more information on how you could potentially get SpaceX in your portfolio. That's certainly a way to do it. You would do that by calling 916-967-3500. And since this is the last weekend before next our seminar, I'll mention it one more time before we go to break. Our first of the year dinner workshop, where we show people exactly how we manage money, what our philosophy is, what some of our guiding principles are. More importantly, what are some of the investments that our clients hold? What are some of the portfolios that we've custom made that our clients hold and how they're doing? What are some specific investments?
Well, the views on economy and the markets and where we are right now, where have we been, kind of where we're going, and how it ties in together, and then hopefully enlightens you to give us a little bit more time to have a conversation of your situation specifically, and then tie it all together.
Yeah, actually, that's mainly what you get out of it is just a real good overview, and most people walk away thinking it was a very good use of their time. They learned a lot. And how do we know that? Because of the comment responses, the survey responses that we get. And that's all we ask, actually. The ticket for coming and getting a great meal and getting a great education on the way we do things and some of the opportunities that are certainly out there. We just ask that you spill your drink. We just spill your drink. No, but you just fill out a comment card. So again, call 916-967-3500 to register for our March 4th dinner workshop at Wood Creek Golf Club from 5:30 to 7. You should be contemplating retirement or retired, and you should have investments that are important to your financial life. So we're going to go to break. Stay tuned. We'll be right back. Hello, and welcome back to the Wise Money Guys radio show. I'm your co-host, John Scambray, and I'm here with my partner,
Giuseppe Visconti.
And I got a question for you. What'd you think of the State of the Union?
I actually didn't catch it, but then I sat down, and luckily they had a rerun, right. So I watched most of it.
All week, it's been the hot topic on.
Yeah, I think it was. He made a lot of good points. Speaking of AI,
I think we got a little market lift out of it too. If you look right after it, market had a good day, then a little bit of a down day, then a really good day, and now a little bit of a down day,
right,
to finish out the week. And
market's been pretty resilient overall, especially after the whole tariff situation, last week, and then just the unrest in Iran. So I thought we were going to open up Monday with a bigger gap down in the market. We were down a little bit, but nothing like I thought. But overall, I think he made a lot of good points. The Democrat side, we actually had them standing up a few times. Whereas
how do you not forget what side of
don't even try and rationalize,
right?
Don't even try and rationalize.
Stand for like those poor people who lost. They didn't stand for that woman who some of them did, but most didn't. The lady whose daughter was stabbed on the train, and most of them didn't stand.
I don't know.
Because it was an illegal person, an illegal alien who stabbed the young girl. She was coming home from working at a pizza place. Takes the train and just got up from behind her and stabbed her to death.
Yeah, ridiculous.
And they didn't stand for that woman. They didn't stand that with the mother.
Right.
And just that's the only thing I don't understand about it.
Stand for the hockey team.
I get that if it's not your president, he's certainly our president, and I just.
Where's everyone's president?
Well, you know what I mean, but
whether you like it or not,
what I mean is, did you vote for him or not vote for him? And the reality is I think, if you're looking at various presidents, which ones are good for, our wealth and well-being and protection and which are bad. I think this one, like him, hate him, but you can't ignore that, he's pro, taking care of people from certainly from a prosperity perspective. He wants.
He's done he's got a lot of good ideas and a lot of good things. He's not perfect.
Nobody is.
Yeah. Some of the things he's come up with, I'm like, that doesn't make sense. I'm not sure why he even does that, but well, he just is fuel to the fire on some of the things and rhetoric that, of him speaking, but that attracts to some people because he's like, he's just down to earth and says what he feels. He's not trying to cover it up. I'm definitely not for the government and, intertwining with private investment, like investing in Intel and things like that nature. But going on that whole AI kick and energy, I like how he is trying to have it where these tech companies can go and produce their own power plants.
Yeah.
So then it's not going to impact, right, the rest of the residents. So things like that is great, right? Some of those ideas are great because then it's not, if they're taking the brunt of it, and then it's not going to be spreading to the rest of us residents, wherever that's going to be, to have to pay a higher utility bill.
I think in argument or in contrast, like you said, we're investing in Intel. Don't forget, in 2008, we bought basically Wells Fargo. You didn't forget. But my point is I think it's a bad. Well, I'm not pointing to Trump. I don't care who it is.
Yeah. It's creating a moral hazard. It's creating an environment, exactly what's happening, where the market just continues to go up. And when stuff goes wrong and there's cracks in the financial system because of either bad management or lack of innovation or whatever the case may be by a private company, right? They shouldn't be bailed out, right? Because then it's like,
well, that's why we have $40 trillion, about to have $40 trillion in debt, because
it's like the banking crisis, the little mini banking crisis we had in 2023.
Yeah,
with
Silicon
Valley Bank and Signature Bank, and then it spread on to First National Republic, right? and they stepped in and covered the depositors. I mean, great for the depositors, but what message does that, I mean, and they weren't that big of a bank. So what message does that play to the rest of the banks out there? Hey, we could take a little bit of risk because we're as big or larger than these banks that they bailed out. And, you know, let's take the risk because we could probably make money for a couple of years if we leverage up a little bit or whatever.
Yeah, it certainly doesn't make you cautious if you feel like there's a backstop to any bad decision.
Yeah.
But nevertheless, I thought it was good overall. I thought the market responded positively overall.
Was it as long as you thought it was going to be?
Yeah, I knew it was going to be long. I knew it was going to be 2 hours.
Wasn't this the longest?
Last one was like an hour and a half or an hour and 45 minutes.
He beat his own record.
So, yes. And there's quite frankly a lot to talk about. I also like, you know, recognizing our older heroes. And so,
that was awesome.
I thought
that
was
Navy pilot
inspiration.
Yeah.
And just giving the Congressional Medal of Honor to the 100-year-old World War II, you know, ace pilot,
right?
And just a lot of neat.
And then
a lot of neat things.
Was it the Coast Guard got something?
Yeah,
as well?
And the helicopter guy who got the Congressional Medal of Honor, he was shot and still landed
piloting the Chinook
for
Venezuela.
Yep, I mean, unbelievable.
Yep.
And that's what I don't understand is how just forget politics. How do you just not, you know, get inspired and stand up for that? There's people out there that care more about.
I think they did stand up for some of that.
You know, helping other people, protecting our way of life, putting their own life in jeopardy.
Yeah.
And how that just doesn't, you know, inspire you is beyond me. But yeah, there was partial standing.
But I was surprised how much they stood up in comparison to the last one. There was zero standing.
Well, you know why?
There was zero standing up
because 73
didn't show up.
Democrat congressmen weren't there. They were doing some weird puppet thing. They were in frog costumes and
what?
Yeah, they had it was called like Drain the Swamp thing. So they
did like a Muppet
They
show?
didn't go to the state. Yeah, they were in frog costumes and other kind of costumes. And it just shows that's who you want representing you.
That's your job.
In your state, in your district.
That's your job. That's your job. And I see the State of the Union as like a regional meeting that you would go to for your job.
Annual meeting, annual performance meeting.
You know what I mean?
Yeah, I mean, so.
But this is the thing with politicians, and that's different. That's the difference between a life in politics and public sector sometimes. And I'm not saying public sector like all, but specifically the politicians versus private sector, right? And that's where I don't like the government to bleed into the private sector, because look, if you do something and you mess up because of mismanagement, fraud, you say one thing and do another thing, whatever, guess what? Your business is done. You have to close your doors. You are accountable. That's it. But not in a politician's life.
No.
You can pass laws, bills, policy, guidelines, fall flat on their face, waste millions or billions of dollars, and they still are in office, and they still get to walk in and wear a suit and go talk to everybody on the TV and so on and so forth. 4 years, 8 years, a decade, 2 decades, right? And not only that, what I did love the most about what he said was no more basically insider trading.
Yeah,
I love that,
and they all stood
because look, all of their salaries are public. You can look any one of them up. So, for example, Gavin Newsom, you can look up his salary, and I think it's like 247 or 274. Maybe I have it backwards. It's less than $300,000 a year. Yeah, I think he bought a $9.1 million home in Marin last year. How does that happen?
Yeah,
how does that happen?
And he still has a $5 million home in Sacramento.
Yeah, and I'm just pointing one because we live in California and we can't not pay attention to our own governor. But there's people on both sides, Republican and Democrat. They should just be fired, essentially. Because if we did anything like that in our industry, oh my gosh, SEC would come down on us so hard.
It really makes no sense. Are you there to actually make your state, your district better? Or are you there for personal benefit? And I think, to your point, most, politicians have gotten to the point to where there for their personal
They
benefit
start getting greedy.
and their power, their need for power.
Right.
And greed is certainly the big driver.
Well, that's why, investment in Intel or investment in this company or saving that bank or saving that bank, that's why it's not a great idea, because then it's almost the same thing. It creates almost the same situation where now you can have this politician, they're in office for so long or get another term, and they've fell flat on their face with the policies and laws and bills that they passed.
Well, and is there some sort of scandalous behavior, right? Did you contribute heavily to a particular politician's campaigns, right? To their political action committees, things like that. And then if you're the leader of that particular company that's getting favor, that's kind of, I mean, scandalous for sure.
Right.
Maybe even clearly it's quid pro quo, kind of unethical. But why does that matter? Why do we talk about these things? Because
we like to raise our blood pressure.
We only care because how does it infect our clients' money? How does it infect your overall financial situation? Does it reduce and erode your buying power? Does it make investments, i.e. stocks or bond prices, go down? Does it make your overall wealth go down?
Or are there opportunities created where you want to focus some of the assets, right?
So that's why we pay attention to those things. That's why we have to follow geopolitical events going on. That's why we follow, more than just the financial side of managing your money. We've got to, keep our nose to the, what's that saying? Keep your nose to the grindstone? No, why would you do that? Right? Keep your ear to the grindstone.
I don't know. Is that your 5 cents?
Whatever that saying is, please give us a call to let us know. But no, the reality is that all these things matter, and you've got to be paying attention to all of them. So if you're managing your money yourself and you're not paying attention to the geopolitical things that are going on, to what interest rate decisions are happening, what inflation and the data coming out and the indicators are doing, what's happening at quarterly earnings timeframes, such as Nvidia, who certainly is a leader on the tech side. All these things are what you need to expect from your advisor, from your advisory firm, or from yourself if you're managing your own investments. If you'd like to see a better way of doing things, give us a call at 916-967-3500. Keep listening to the Wise Money Guys. We'll be right back. To the Wise Money Guys radio show. I'm your co-host, John Scambray, and I'm here with my partner, Giuseppe Viscani. And one of the things we always like to discuss is just some of the services and some of the things you can allocate your portfolio to, that we certainly like to allocate people's portfolios to. And that's the alternative sector, or the alternative category of investments. So often, I think people haven't been exposed to different things from a diversification perspective that have a much better chance at being negatively correlated to stocks or bonds than just always having all your money in either fixed income or equities. And we have really benefited our clients from making sure a slice of the pie is in alternatives.
Right.
And man, it
helps smooth out the ride as well.
It blows me away how many people who have, hundreds of thousands and millions of dollars, and then they have basic like mutual funds in their account.
Right.
They don't have individual stocks. They don't have a custom portfolio. They just have baskets and baskets of different brand name mutual funds.
Well, with a new client that we just gained, he has a portfolio that was about $2 million in a retirement account. And a big chunk of it, he had some individual fixed income or individual bonds, same thing. But a big chunk of it was in funds. And, he didn't go through his statements with a fine tooth comb, but, first glance, we pointed that out and said, you have enough money where you can create your own fund with individual direct investment, because not only you're paying a management fee for that advisor, but then these ETFs and mutual funds that you should have individual, direct investment like individual bonds. Instead, you're having it through funds. Then you have an internal expense ratio within that fund as well, on top of the management fee that you're paying. And it just doesn't really make sense.
Yeah. And the fact that you really don't know what you have and or how it correlates to,
especially like in the year 2022.
Oh, in 2022, everything had a perfect correlation.
Yeah.
Right?
Well, except for alternatives.
Went down, bonds went down, and guess what didn't?
Alternatives.
Alternatives.
Not all alternatives, but some of the alternatives that we've used, did not go down.
And so, one of the ones that I continue to like, and I think there's just, again, take this information and either, talk to your current advisor or firm about it,
or call us.
But then I would think, gosh, if these are things you're hearing about for the first time, and the firm that you're with or the advisor that you've been with, didn't really call you or let you know that there's other ways to make good money on your money without just being in stocks or bonds.
Sometimes they don't have access to it, especially if you're doing your own investments yourself and you're just a regular retail investor. More times than not, you're going to have limited access to some of these alternative investments, number one. Then, there are financial advisors, and depending on the firm that they work with, they'll have access to maybe a bigger market of alternatives, but sometimes not as much. And really, the doors open really wide to this alternative space when you're working with somebody that has an RIA, registered investment advisory firm like ourselves. Because then it's just, number one, we're unbiased. So we have Schwab as our main custodian, but we have other custodians that we use as well. And we're talking with another one, hopefully here pretty soon, we'll be able to unveil that we'll have another relationship. But they all have different tools and different investments out there, some that are in-house, some that they have access to third parties out there. But number one, you want to have a wide array, and you want to have the option and the choice to be able to put alternatives in there. And then if you do have the choice, what are those choices? It's kind of like a 401k. Somebody says, hey, I have a 401k. Should I keep it in a 401k? I'm retiring, and leave it there, or do I roll it over into an IRA? The biggest difference is with a 401k, you have a narrow menu of options of just those ETFs and mutual funds in there. When you roll it over to an IRA, it just opens the floodgates of all the other different investments out there that you can put into your portfolio and customize an actual portfolio.
Well, and to your point, the ability for us to work with different custodians is huge, especially when it comes to alternatives. One of the biggest companies out there of all, Fidelity, we have some clients in Fidelity, and where we're managing the money, and it was a terrible experience and process to try to put a simple structured, what's simple to us, a structured note that was custom made and should have been something that could easily allow us to put in somebody's portfolio, and they didn't have access.
Not only that, but then they required a minimum of $100,000 in an account, which $100,000 in that particular note. That's what I mean.
Right. Not an account. Then people would think, oh, you only have to have $100,000 account. No, it was $100,000 just in that investment,
in that structured investment. Yeah. And that was very surprising to us, where, when we're dealing with Schwab, it's nothing like that. It's great support. It's great. And so these are the things that we're able to go through and say, just as I said before, we're adding some new tools, some technology applications to our firm. We get to pick and choose, right? We also get to pick and choose who we're working with, whether it's Fidelity or Schwab or so on and so forth. And what works best for the business, what works best for clients and gives the most amount of choice and autonomy, that's what we're after. And the support on the backside of this institutional side.
And by the way, we're going to show you what a structured note is at the workshop. They're really a fantastic way to reduce risk, but still have great potential returns, stock like or better returns. Certainly the last one we did was better than what the S&P has averaged over the last 20 years, which is 8-9%.
It's like north of 9%. Yeah.
Yep. And this particular one was a 3-year with a coupon, a yield of 10.85% per year. So we'll explain the nuances and how those work and what's the risks, what's
how it fits in a portfolio.
Exactly, at our workshop. So please give us a call at 916-967-3500. If you're retired or about to retire and you have assets that you rely on for your income or for your legacy or to give to charities or whatever the goals may be, you'll want to attend. It's going to be at Wood Creek Golf Club from 5:30 to 7 on March 4th, which is a Wednesday in Roseville. Call 916-967-3500. Well, I hope you enjoyed listening to the Wise Money Guys radio show. We always love talking, so please come back next weekend and give us a listen, and have a wonderful Saturday.
Have a great weekend. Hope to see you on Wednesday.